Good morning, San Francisco.
Good morning!
I'm Tim Farnham with Black Label Real Estate, and this is your Monday morning market update.
This week, we will be starting with mortgage news. Last week, the Federal Reserve not only raised interest rates by 0.25%, but they also indicated that they will continue to raise rates, and possibly with bigger jumps over the next couple of years. The mortgage rate industry was very fast to react, and while 4 weeks ago the interest rates were still in the mid-30s for a 30-year fixed, as of this morning the average interest rate is 4.42%. This marks a 30% jump in rates from just 1 month ago. This jump raises a monthly payment of about $350 per million borrowed, from $4,700 to $5,050. With this shift in rates, if you are looking to buy, I would highly recommend talking to your loan officers as soon as possible to requalify at these new rates. Due to interest rates rising, we are going to be paying attention to a few more metrics to watch for market shifts. I've added the back on market metric because if interest rates made buyers no longer qualify for their home, it will show here. Price increases and price reductions are also added to the list because if there is a slowdown in buyer demand, price reductions are likely to increase. These three metrics will be important to understand as we move through this potential market shift. This week, we are seeing a leveling off of new listings, with about the same new listings as we saw last week and about the same number of homes available as we saw last week. So far, no big changes in the back on market metric, but we did see 8 in the over $1 million segment, which is 5 more than the previous week. Days on market is also staying steady at 27 and 20 days respectively. New listing sale price to list price stayed in the under $1 million segment and raised 2% to 109% in the over $1 million segment. Keep in mind that this last metric is a bit delayed, as homes that closed this last week are the ones that went into contract 2 to 3 weeks ago when interest rates were still in the mid to low 3s. In the single-family home market, we are seeing a similar situation with the same availability with 125 homes in the under $2 million segment and 45 new listings. The pendings did go down slightly to 47 from 55 last week. However, the median days on market is remaining the same at under 2 weeks for both categories. No change reported in the sales price of newly listed homes, as they remain at 110% and 124% respectively. In the luxury home market, once again, we are seeing little growth in either segment, with 30 homes in the $2 to $3 million segment and 49 homes in the $3 million segment, which is down by 4. We did see 18 homes hit the market though, which is slightly up from last week. Not much movement in the price increases or decreases, but pendings are noticeably down, with only 14 in the $2 to $3 million segment and 7 in the over $3 million segment, which is down 6 and 4 respectively. We will continue to track these values, but since the pendings are equal to the new homes, we didn't see that much difference in overall availability. Last, the days on market remains at 12 days in both segments. In summary, looking at availability, new listings and closed listings have been pretty steady all year, averaging around 180 new listings per month, with closed listings steadily increasing over the past few months. As mentioned, we'll be following the back on market and price reduction metrics to better understand any market shifts. There were only 53 price reductions last week, which is not too much more than we have been seeing. But this is one of the first indices to go up if the market starts to cool. Thank you for joining me for this Monday morning market update. My goal is to keep you informed on market conditions and trends. Remember to subscribe to this channel to stay informed on these market conditions. And as always, feel free to message me directly if you are curious about what your home is worth or if buying into this market is the right move for you and your family.